Nvidia kicking off 2024 with a bang. The chipmaker expanding AI drug discovery partnerships with Amgen and Recursion Pharmaceuticals, and reportedly now planning to begin mass production of a China-focused AI chip to comply with U.S. export rules in the second quarter. Joining us right now is Joseph Moore, Morgan Stanley semiconductor analyst. Joseph, so we have a cross current of issues here. We have some positive news. That's also moved the stock. We also had some negative news, which was there was a real question mark as to whether folks in China or some of these companies in China are going to want these throttled chips, for lack of a better phrase.
Yeah, I think there's certainly a lot going on with Nvidia, as there has been for a while. What we're seeing is they're going to comply with the Commerce Department restrictions on shipping to China. They are readying products that will ship into that market, some of which will be subject to licensing requirements. So there's some uncertainty around all of that. When that first emerged, we did say that there would be some headwinds coming from China. But I have to say, given those restrictions, given that 20 to 25% of their business had been coming from China, there's been almost no discernible effect in the supply-demand situation for NVIDIA's GPUs. So very strong tone of business. The fact that they don't have a lot of China revenue near term has not really changed the near-term trajectory. And we are optimistic that they'll find ways to fill gaps in that China portion of the business.
What do you make of the throttling question, though, and whether there is a market for the throttled chips?
Yeah, I think we'll have to see exactly where the licenses require. Licenses require them to ship, because the situation is they have a variety of products that will come in underneath the threshold, and significantly 50% below the threshold is a level that they need to be at in order to ship without any kind of licensing whatsoever. It's more competitive as you move lower into that part of the market. And so I think there will be demand. NVIDIA has a broad ecosystem of software and services and support, but a lot is going to depend on what exactly they're allowed to ship. A lot of NVIDIA's strength in this market has been the execution and the fact that their AI chips are significantly above most of the competition. As you do limit what they can ship, it's going to be more competitive. And so I certainly don't expect to see them get back to the peak levels that they saw in China. But I am optimistic that they will be able to serve that market. And Chinese models will need to be trained. In some cases, we'll see.
What's your philosophical? I don't know if it's philosophical. Maybe it's very practical. What's your take, though, from a sort of U.S. policy, strategic defense policy, about how you think the U.S. government's going about dealing with chips in China?
Yeah, well, I think that the Commerce Department commentary specifically to AI has been that they certainly want to enable certain portions of AI. They're not trying to limit things in the sort of consumer domain, and the focus is on defense issues and things like that. And so to me, that does suggest that there will be an area where NVIDIA will be allowed to ship, but it won't be the very highest in chips. More broadly speaking, there's obviously an intent to constrain China's use of semiconductors and manufacturing of semiconductors through manufacturing equipment. And I think we'll see, an annual cadence of rules, and companies are complying with those rules. But do you think,
Joseph, the question I ask is, do you think it's working? Do you think it's not working? A lot of folks looked at that Huawei phone a couple months ago over the summer with a chip that was much more advanced than people had expected, built in China.
Yeah, I mean, China has a lot of strong and resourceful semiconductor companies. They will be limited by these rules. And so I think to some degree, it is constraining China's competitiveness in particularly the cutting edge portions of the market. But at the same time, I do believe that, China is spending quite a bit of money. We're seeing a very large portion of wafer fab equipment right now is going into the Chinese market to serve these trailing edge nodes. So China is building domestic capabilities, not at the cutting edge.
At $525 a share, what do you tell investors right now to do with this stock?
Well, we've liked the stock a lot. I think what has to happen now, we had such a great year last year with this stock. I think we need to consolidate those gains, and I think that's the process that's been going on. We are seeing a situation where there has been a shortage of these GPUs, but we're ramping that supply very, very rapidly. I'm very impressed by how quickly NVIDIA has brought the supply chain up. And that does present some challenges as to the back half of the year. I think you'll see some of these shortages start to ease. And we're hearing some of that now, like, okay, some customers are maybe going a little slower than they were. It doesn't change the fact that right now they're selling everything that they can make. And there's a lot of demand for product above and beyond what they can currently make. And this is not that expensive of a stock. Earnings have come up a lot. We're now looking at, $20 plus of non-GAAP EPS this year. I think those numbers are likely to be going up. So, we're going to season the stock a little bit and say this is no longer the stock that it carried the market last year and had this kind of huge move last year. This is a company that's going to be evaluated on its merits at a mid-20s multiple with very strong growth prospects. So we like the stock quite a bit here.